Good morning. I am John Welch, Executive Director of the Brazilian American Chamber, and on behalf of the Chamber, we wish you all health and safety in this difficult time. The move to working remotely with increasing intensity, especially into home offices, has significantly affected the residential real estate market in New York City, São Paulo, and the surrounding areas, but in different ways. Today, we have York Casas Frederico Gouveia, who will present an overview of the New York City residential real estate market and trends observed by buyers, sellers, and renters. Also, Matheus and Souza Fabricio from LOPES will share the latest numbers and patterns seen in its vast network of brokerages and new development portfolios across São Paulo. On the financing side, FP Capital's Fernando Bergallo will offer his views on how the current dollar BRL rate has influenced investment movements between Brazil and abroad for real estate purposes. And Ornare's Schattan will share his clients' home office designs and demands. Now, I will briefly introduce our guests, but you can find their full bios on the link contained in the invitations and on the reminder that you received yesterday and on our website. Fernando Bergallo is CEO and founder of FP Capital. With more than 15 years of experience in private equity and real estate transactions, Fernando Bergallo is CEO and founder of FP Capital. He is a renowned financial market operator responsible for conducting more than 20,000 foreign exchange transactions per year for both individuals and legal entities. Mr. Bergallo holds a degree in business administration from PUC São Paulo and an MBA in finance from IBMEC, the Brazilian Institute of Capital Markets. Fabricio is Executive Director of LOPES, Brazil's largest brokerage group. With 13 years of experience in real estate, he heads LOPES with more than 90 offices in 40 cities, 4,000 agents, and a listing of more than 240,000 units. Mr. Fabricio holds a bachelor's degree in business with specialization in digital transformation from MIT. Frederico Gouveia is a licensed associate real estate broker and founder of York Casas. A native of Brazil and longtime resident of Miami, Frederico has a diverse sales background comprised of international clients and Manhattan locals. He has sold several multi-million-dollar properties to primarily foreign buyers, making a name for himself in the international real estate market. Prior to real estate, Mr. Gouveia spent much of his career in music, his great passion. As a symphony orchestra manager and producer in New York, you may recall the happy hour we had with him and his mother a couple of weeks ago. He is also a talented violinist, which that bore out, and conductor, who often volunteers his time in music for charitable organizations in New York City. Finally, Peter Schattan is a Brazilian engineer and the director of Ornare, New York, a high-end kitchen and closet business from Brazil. Peter is also responsible for opening Ornare dealerships throughout North America. Ornare currently has showrooms in several states in Brazil and the US, Miami, Manhattan, the Hamptons, Houston, Dallas, and Los Angeles. Before we begin this exploration, I would also ask you to please use the Q&A tab for questions. You can make them at any time, and we will look to answer them after the panel discussion during the Q&A period. Thank you very much. Now I'm going to turn the microphone or the screen over to Frederico Gouveia from York Casas. Ready?
Good morning, everybody. Thank you so much, John, for the presentation. Thank you, everybody, for the Brazilian American Chamber of Commerce for this chance to do this panel together. All the friends here that are with us joining. It's the 1st of September, and traditionally, for those that are familiar with the New York City market, this is the start of the fall market when people begin to return to the city after having vacation in the summer months somewhere else. And of course, this year is completely different with many people staying away. And we are going to do, I'm going to share my screen very shortly with a few data points and market numbers for us to analyze. And I welcome any questions that you may have during it. And this is meant to be more of an interactive reflection together that we do here. Real estate is something that everybody's interested in. So I'm going to focus specifically on residential real estate, but if anyone would like to talk about the office or retail side, we can definitely address those questions at a later time. But I think you'll see that the very similar patterns we're seeing in the residential side in New York City can be observed as well as in the commercial side. So I'm going to share my screen here, and Just guys, let me know if you see my screen, please. So the beauty of, everyone can see the screen?
Yes, it's
Okay,
great.
cool. Thank you. So I think the beauty of the market here in the US, especially in New York, is that there's so much transparency in data that you can just eat up data all day long and make different analysis, conclusions, and parallels, right? So there's two major websites that I like to draw the data from, which is City Realty and Street Easy. Street Easy is owned by Zillow, and it's the biggest consumer aggregator website in New York City. We as brokers, when we have listings on the market, 99% of consumers that inquire, they will come through Street Easy. So this is the report for July. I asked Street Easy for the August numbers, but they didn't have them available yet since it's September 1st. Their data team is compiling all of the data for August, and they should have it available in the next couple of days. But what they did tell me is that the same trends we saw in July, they're continuing in August. And this is just a synopsis of what we saw in July. And I'm going to show a couple of graphs afterwards, but there was a record number of new listings that came on the market, which was an 87% increase in the amount of supply inventory compared to July 2019 in Manhattan. Also, fewer homes went into contract last month compared to July 2019. That's 37% fewer homes. And then the homes that actually closed after the negotiations, they sold for a median of 10% discount. So the negotiability between the original asking price and the actual sold price, that gap was 10% or $117,000, which in other markets around the country or perhaps even in Brazil may not sound like a lot, but this is the largest negotiability percentage gap that they have ever tracked since they started measuring this in January 2010. And I remember back when the market was really on fire, and that's 2012, 13, 14, a little bit of 15. The negotiability was between 3%, 2%, 4% maximum. And there were 2 years in a row that condos in Manhattan, I believe more than 30% actually sold at the asking price or above the asking price during those years. So that was the expectation and the patterns compared to today, right? Now, when we go to Brooklyn, we see a similar pattern that they accepted at a medium of 8% negotiability, so a little less than Manhattan. And then sellers added 1724 new listings to the market, a 50% increase over last year. So you see a lot of inventory coming in by sellers, as well as landlords, which we're going to see next. And finally, Queens, the home prices rose 1%, and they sold faster than last July, which is an interesting trend we're observing. And I think it has to do with low interest rates and people wanting to take advantage of the moment to buy houses, to go to places where there's more space so that they can do their home office and get away from areas that are too dense and too vertical like Manhattan. And they also sold at a record discount compared to the initial asking price. So you see 6% negotiability versus 8% in Brooklyn versus 10% in Manhattan. And so this is a big gap. Now, for those that are familiar with actual prices and average prices, the site City Realty compiles the recent sold and closed data for condos, for co-ops, for neighborhoods. You can get very granular there. And I like this particular data set here because it shows the activity for the last 45 days of actually sold and closed condos in Manhattan. When we look at co-ops, we see that the prices are drastically lower, but we also see that co-ops are selling. And you're here on the left-hand side, you see the actual number of transactions that took place in the last 45 days. 17 studios, 52 one-bedrooms, 77 two-beds, 18 three-beds, and 11 four-beds. Excuse me. And the median sizes and the actual sold prices. When we did this same analysis a month before, the numbers were not that much different, but there was a little less activity. So it shows that the people that are now on the market, they are looking for deals, and when they find deals, they are actually buying. So if we find that people are making decisions, whereas if you look at, say, 2016, 17, a lot of people that were looking on the market was just kind of just looking. And after all of this pandemic, it has prompted many people to make decisions, whether they're leaving the city, whether they're moving around within the city. And so this is from Street Easy, and it shows in blue the Manhattan market. Brooklyn is in orange, Queens is in green. So the complete sales inventory, so everything that's currently on the market for sale, you see in blue. For the month of July 2020, there are 9,600 properties, residential properties for sale on the market in Manhattan, and that's compared to 9,500 in the year before, July of 2019. So even though the inventory shot up a lot, it's still not at an all-time high when you look at the curve from the end of 2018 to the beginning of 2019. So when you look at the actual sales, what things have actually sold and closed, then you see that things have slowed down a little bit compared to last year, which is understandable. And also, there are a lot of statistics that began to come out in June, for example, showing a drastic reduction in pricing and activity. But then you have to take those with a grain of salt, because a lot of the things that began to close in May and June, they're not reflective of the current market, because most likely the people that sold and closed on those properties, they began their search and finding their property before the quarantine began in many cases. Since you can do inspections, appraisals, many buildings completely closed off any guest access for 3 months. So this also, there's a lag time here in the data for us to be aware of. And then look at the rental inventory. This is a very interesting story compared to sales. The amount of inventory has drastically increased in all the boroughs in Queens, Brooklyn, and Manhattan, especially Manhattan. Is you see the bar looks like one of those skyscrapers on 57th Street compared to July of 2019. July of 2019, there are 22,000 properties for rent in Manhattan. This July, 37,000. And we are seeing that people are renting. They're getting out of leases where their landlords are not giving them the discounts or the concessions that they're demanding. And in many cases, they're just simply leaving and breaking their contracts in order to enter into contracts in newer properties with much lower rentals. So you see that has affected the asking price for rentals in Manhattan. You see last year in July, $3,500 was the median asking rent for a property in Manhattan. And in this July, just now, 2020, that went down to $3,200. And what we're also observing is that people are negotiating much more aggressively. So we have many exclusive properties for sale and for rent. And a lot of the rental properties we have, many times people are just inquiring cold on an email and just making an offer sight unseen, and just trying to gauge the level of desperation of the landlord to see if the landlord is going to agree to their very low offer. And they won't even bother going to see the property if they see that the landlord's not going to be very negotiable, since they have so much options to look in the market. And I think part of the thing that has helped this process has been the video features, the Zoom, the virtual tours. This has been extremely helpful for us in the market where we have to physically go and show spaces. Now we have the entire real estate brokerage community has had to make professional quality, detailed videos of these properties and upload them next to the floor plan, next to the photos and the information, which has expedited the search and find process and made it more seamless. I think that's one of the silver linings of this pandemic and the paradigm shift is people relying much more on the technology and the video in order to filter out the things that are really not interesting to them, which saves us and our clients more time. And this is it for me. What I would like to just say as far as the trends, what are the opportunities? One thing that we are noticing across the board is if a property has private outdoor space, they will sell or rent much, much quicker. Everyone is gravitating towards wanting to have some kind of personal, private outdoor space. And so if you are an owner in the city and you're not sure if this is the right time to sell or the right time to rent, my recommendation that I'm making, for most part, each case is different, but generally our recommendation is if you don't need to sell, don't sell now. Rent it out for a couple of years and wait until the market becomes more stable. But if your property has private outdoor space, it'll be a hot commodity. There's a lot of demand for that. And I think what we're seeing in the metropolitan area of New York City is a vastly different story when you compare it to the outer boroughs. So New Jersey suburbs, Westchester, Connecticut, Hamptons, Florida, where they're getting a tremendous onslaught of New Yorkers. There is a report which I'm happy to share afterwards from the partnership from New York City, which is an amazing blueprint of the public and private sector defining the next stages for a recovery. It's a 64-page report that was compiled by 14 different global consulting firms, and the data is incredible, the way they've interviewed different people, different industries, and their perceptions on the recovery. And one of the things that they noticed is that approximately 5% of the population in New York City left. I say this just, and then I'll pass the ball to the next speaker, because we're hearing on the news incredibly sensationalist and apocalyptic news stories, as if New York is completely dead. It'll never come back. It's done. It's over. And when you look at just 5% of the population, that's a very low number. Sure, it's not something to just completely ignore, but I don't think it's something that we need to be so alarmed about. I think things will shift around, and the people that have money now for an opportunity to enter the market would benefit greatly, because they'd be able to, it is a buyer's market, and they'll be able to have all the cards on their side of the negotiating table to make the best deal. So thank you, and I'm open for questions, and I pass the ball to my friend, colleague Matheus in São Paulo.
Thank you, Freddy. Good morning, everyone. Thank you, John, and the Brazilian American Chamber of Commerce for the invitation. It's a pleasure to represent the Lopes and the São Paulo market here in this panel. I'll share some on my screen also. I have some few slides here. I think everybody's seeing, right? Okay. Well, first of all, it's important to mention for everyone that Brazil had a very difficult years for the real estate in the last 4 years. So what we saw in 2019 was a huge recovery in the market of São Paulo. As you can see on the graph below from Secovi, we have in 2019 the best year in numbers of new units launched in São Paulo. There were 55,500 new units launched, which is 49% growth if compared with 2018, and 72% above the historical average of 32,000 units. In terms of sales, the units sold, the pattern is the same. There were 44,700 new units sold in 2019, the city of São Paulo, new units, which is 49% growth if compared to 2018, and 66% above the historical average of the city. When we see the pattern, the types of units that are being sold, what is interesting to notice is that we are seeing that the low end segment is gaining space both in sales and also in new launches. Last year, 2019, 45% of the units sold in São Paulo were up to 240,000 Brazilian reais, which is what we consider the low end segment. That's why, as you can see in the charts below, that even with that increase sharp increase in the numbers of units sold and launched. In terms of gross sale volume and gross launch volume in Brazilian reais, it was pretty the same as the best years we have in the historical series, which were 2011 and 2013. And as you can see on the graph on the bottom right of the presentation, as you can see, the low end represented 45% of all the units sold, and in the years before, it was something between 16 and 37%. In terms of inventory, the number of units for sale is extremely healthy, in our opinion, because there are 29,000 new units for sale, which is equivalent to about 12 months of sale or a little bit less. So it's something that we consider very healthy for the Brazilian market. Important to mention that 84% of this inventory is focused on 1 or 2 bedroom, 80% up to 65 square meters, which I think it's something around 700 square feet, if I'm not wrong, but forgive me if the conversion is not right, but it's 65 square meter, and 74% are up to 500,000 Brazilian reais. One thing that's interesting to mention is that there's only 491 units available, new units available over 180 square meters, or and 1,800 units over 1.5 million Brazilian reais, which is what we consider the high-end market. So we have a lot of low inventory for this market. I just brought also the graph from the right bottom, the price variation in the last 12 months, accumulated in the last 12 months, since 2010 to end of 2019. As you can see, the market accommodated, because we had a huge boom in the Brazilian real estate market, São Paulo real estate market, from 2010 to 2014. When, as you can see, prices were up like 20-30% a year. So that movement started to slow down, also because of the economic crisis that Brazil faced in the last years. But as you can see, in the secondary markets, the red curve, we never had a drop in the prices. They were all, in the worst case scenario, they were stable. And last year they went up 2%. And in the primary market, you have some kind of a greater fluctuation. But despite the 2 moments of crisis that we have, the prices also went up most of the time. Last year was 4.65% increase in prices in the primary market. Well, and everybody asks us daily in Brazil, how you manage to be selling so much with all this pandemic and all this difficulties that we are facing in Brazil in a macro scenario. Well, there are 2 great fuels for this market, which is the interest rate and the credit available for mortgage for the people. As you might know, the mortgage, the real estate loans in Brazil is something really relatively new if compared with the US or other markets. As for you to have a notion of that, about 10% of our GDP is equivalent in the real estate loans. In countries like US or Europe, you have more than 100% of GDP. So we have a lot of space to grow. And you can see in 4 years, our Selic rate, with the base interest rate in the market in Brazil, it dropped from 14% a year to 2% a year. This is the lowest level in the history of Brazil. So as you can imagine, the impact that this have, first of all, of course, the Selic impacts the real estate rate for financing, and each 100 bips drop in the financing interest rate there's just, according to Abraham, 2.8 million people become eligible for a mortgage loan in Brazil. So imagine the impact of a drop in 1,200 bips in 4 years. So there's a lot of people that are now eligible for credit. Well, the money for the real estate credit in Brazil came from our savings account balance, from our legislation. And you can see on the graph on the top right, this saving account is returned for a growth curve, because it had some years of decrease, 2016 and 17, but increased in the last year 6%. So we have more money to loan to the people. And the good news is that even with a huge increase in terms of mortgage loans in residential market in Brazil, as you can see on the last graph, 37% of increase 2019 compared to 2018, we still have some space to reach what we had in 2013 and 2014, when we had more than 100 billion Brazilian reais in mortgage. Well, and talking about the recovery because of the pandemic, first I would like to start with the graph in the right side of the slide. This is the internal graph from LOPES, and it only compares our own operations. So our franchisees are not in this market. And as you can see in the red curve, we were selling about 12 million reais per day in our own operations before the lockdown, before the quarantine in March. And once the point of sales were closed, both the office, the real estate office, and also the points of sales from the developers, this amount of sales dropped significantly to the bottom in 25 of April to 3 million Brazilian reais. So that was a huge drop in our sales volume per day. And then we had a very fast recovery since then. And we ended the month of July selling the same thing that we were selling last year in the same period. So it was a very fast recovery, in our opinion, anchored by this level of credit and interest rates. As you might see on the graph on the left and the top of the slide, in July, there were sold 4,300 new units in São Paulo, which is 45% more than June and 21% more than July last year, without pandemic and without everything. And we saw in the accumulator of 12 months, there were sold 47,000 new units in São Paulo, 19% higher than the same period 1 year before. And one thing that's also interesting, again, talking about credit, as you might see on the red bars in the slide on the left bottom, in every month of this year, even with the pandemic, the residential real estate loans were considerably higher than what we saw in 2019. And in July, there were almost 11 billion Brazilian reais of mortgage of residential real estate loans in São Paulo, if compared with last year. So it's 34% increase in terms of credit, which explains a lot of what we see here. That's it. There was, I think I had my 10 minutes. I would like to end my presentation saying that we love São Paulo. It's a pleasure to be here. And if you guys want to invest, you want to talk more about the São Paulo market, we have the pleasure to help you. We have 40 offices in São Paulo, almost 100 offices in Brazil. We're in 40 cities and 10 states. So please feel free to ask for a LOPES agent to help you. Thank you very much.
So we'll turn it over to Fernando Bergallo of FP Capital now. Fernando? You're on mute.
Yeah, no, I'm not. Okay. Well, first of all, I would like to thank John Welch and the Brazilian American Chamber for this opportunity. And also, it's a pleasure to be together with companies as LOPES and Ornare and New York Casas. So thank you all for this amazing opportunity. And regarding our project and our company, I guess the first thing to say is we are foreign exchange brokers here in São Paulo. We have also offices in Miami and Lisbon. And we basically trade money. We deal with foreign exchange. So foreigners sending money to Brazil and also Brazilians buying properties or sending money overseas for any kind of investment. That's what we do for more than 15 years here. We have this Brazilian Central Bank license to do that. So we have established operation here in São Paulo. And regarding that and talking about foreign exchange, I guess it's important to say that the foreign exchange rate is a very important thing when you consider to invest overseas. Because, for instance, if you send money to Brazil for investment here in real estate, you are going to use US dollars, for instance, but you are going to make the payment here in reais. So in 3, 4, or 5 years, or I don't know what time, probably you're going to send this money back to the source, to the origin. So it's very important that you can have a good foreign exchange rate, because if not, does not make sense, because we're doing maths in the currency that you invested, like in US dollars. So saying that, I guess we have, and talking about the market here now, nowadays we have a situation where the Brazilian currency is very depreciated related to the US dollar and the euros and other foreign currencies. We get this year regarding the US dollar to reais rate almost 6, like when US dollars could almost buy 6 reais. That occurred in June and May, and that was the biggest amount, the biggest rate in history. So that's not a good thing when you say about a rate, because the rate is related to confidence also. So we're struggling about that in Brazil, but we have some explanations about that. And as Matheus was saying, we have the lower Selic rate in history, and that for sure is the main reason that we have the US dollar so expensive here in Brazil. Because when you do that, like for Europeans or for Americans, it was not that unusual to have like a basic interest rate in 2 or 3% at the year. But for us Brazilians, we're used to very higher rates, like 10, 12, 14% a year. So when you come to that, to a level of debt, 2%, a lot of money that was here to receive that capital gain of this big interest rate goes back to other countries. So that was the main reason that we could see that level of depreciation of the Brazilian currency. Also talking about that, we have here some data to share with you guys. You know that it's very difficult to pretend or to think about the future foreign exchange rate, but we have here a bulletin in Brazil called the Focus Bulletin. That is it's like a research from the central bank with more than 100 financial institutions, and when they ask, well, what are your team expectations about the interest rate and dollar rate and everything else for the future, for the end of this year and for the next year. And the last bulletin focus, the Focus Bulletin released last week, tells us that the market expectation is that we'll have $5.20 at the end of this year as a US dollar to Brazilian reais rate, and for the end of and also for the Selic, we have this 2%. I guess it's not going to go more lower than that. So 2% and 5.50. That's probably will be the scenario at the end of this year. And for the end of the next year, 2021. Besides, it's very difficult to make this kind of prediction. The market bets in $5 for the US dollars for the end of next year, because the Selic rate will probably get higher. So this 2% is circumstantial. I guess we can't keep this rate too long. So the market bet is for 3% of a Selic rate for the end of next year. Of course, this is just like opinions of the financial institutions, but that's what the research tells us. And going back to the real estate market, I guess also this very low rate gives us a big opportunity for the real estate here in Brazil because of the two reasons. The first one, of course, for the mortgage, you get a very lower rate, lower price, lower cost. So we can see, as Matheus presented, we are at the same level of last year, the same time, July. That's a very good news for all of us. And the other thing is the people, they can't only, and I guess this is the main reason, is that Brazilians cannot more just left their money in the bank, waiting to have that 1% a month that was our rate for like 3 years ago, and they're moving to other markets. They're moving to stocks, and they're moving for the real estate. And real estate, I guess, I'm not expert on real estate, but you can see there's always evaluation on the long range, long term, and I guess we can see that there's a much more investment now moving from the financial market to real estate. And here, regarding our specific function on this transaction, we have here the mission of doing that. So if you are a foreigner and you want to invest in Brazil real estate, you have plenty of opportunities here. You need to send money overseas or send money from US to Brazil. And regarding that, our actual regulation, central bank regulation, is very dynamic. So it's very easy nowadays for a foreigner to send money to Brazil. There's not that lot of bureaucracy that we used to have a few years ago. The actual central bank board is promoting a lot of actions to make that process more dynamic. So I can easily tell you guys and all the audience that it's very easy nowadays to send money from other countries to Brazil. You as a foreigner, you can have here a non-resident bank account. We do that a lot, and we create a non-resident bank account to receive those funds under your name and for your investments here in Brazil. And also the opposite. If you're a Brazilian and want to invest in New York, buy a condo with Fred, you can send money overseas also very easily. There's few compliance requirements that's in compliance with bank good standards, but it's very easy nowadays also to move your money overseas. I guess that's the main idea of this presentation, because a few days ago it was very dramatic. I have here plenty of cases that foreigners trying to send money to Brazil, and it was a big problem. How to do that? How to do this? So, and nowadays I can guarantee you guys with that specialized work, you can do that kind of transactions very easily, and our office is now in a privileged position to make those transactions. That's our daily thing here. We do that a lot, so we'll be happy to help you guys with all questions about that, about moving money overseas and making foreign exchange transactions to Brazil and from Brazil. I guess that's the main idea here.
Thank you very much, Fernando. That was great. Now we'll pass the screen to Peter Schattan or Ornare. Peter.
Hello, hi everyone. Thank you, John. Thank you, Brazilian Chamber, and thank you, these amazing panelists, for all the information and numbers. Well, I'm here just to tell you that whatever they are telling you is true, from the design point and from what we are seeing from our customers. Instead of showing so much numbers, we're gonna talk a little bit the design trends and what our clients are looking for and asking us. So what we are seeing in the US and also in Brazil, like John said, we have 5 showrooms in the US, 6 showrooms in the US. We just opened in the Hamptons and 16 in Brazil. So we are seeing a trend of people from New York moving to the Hamptons, to Connecticut, like Fred mentioned. Even their schools, like we heard at Hampton schools, there used to be 60 kids per classroom, and now it's 260 kids per classroom. That's why we are opening in the Hamptons. And talking about real estate market, we see also an opportunity for retail, because what those guys told basically was residential, and we see a shift of a lot of people buying in the Hamptons or around the big cities, in São Paulo as well, like Boa Vista or these other like rich condos around the big cities. But the retail doesn't follow that rule, so we see a lot of opportunities, open spaces for better rents. That's why we are now looking for a new cities to grow, like in Connecticut, for example, like in San Francisco, in north of Florida, where these clients are going to, and maybe they will coming back, or maybe they will stay half of the year in both places. So just so you know a little bit, I mean, we do the kitchens, the home, so this could be as a home office. People are asking a lot for these new collections, bigger kitchens, so they can stay in their kitchens, they can stay in their houses a long period of time. We also here in New York, a lot of big companies are considering to allow their employees to work from home until the end of the year, and even until like forever. Always a big part of the office will be working from home for forever. So all those clients are investing a lot on their homes, and so they can have a better quality of life. And here are some pictures, but what I really want to mention is this. So because all of these, we created a new home office system. So basically you can, when you close the home office, can you see my mouse? Can you see my screen, right, everyone? So basically here on your right side, we can close the doors, and it becomes like a little luxury vanity. And when you open, it's a home office. So this home office could be in the middle of the living room, or it could be inside the closet. Like for example, could be inside of one of these closets. It could be inside a vanity room. So we have a lot of clients that are asking, I want to do my makeup and also have a space for a home office, and even like real rooms for home offices. Let's say they get one of the rooms of their house and do a home office. And talking about numbers, we also see our revenue. So we are following this trend, and we see also our competitors doing more sales this year than last year, which is great. We thought that we were very worried in March, but we had actually great months after that, because really we have this flow for renovating or buying a new houses. And something also that Fred mentioned about the Zoom and the virtual experiences. We were developing for 2 years already a virtual glass. So the clients, it's easier for the real estate market because they do only one apartment. So it's always the same apartment, and then they do the virtual glass, so the client can walk inside the apartment. But in our case, we have every client is a different project and is a different experience. So we develop a way that we can put your project inside the virtual glass. So you can walk in your kitchen, in your closet, in your project, you can change color. So it's very, very nice. The showrooms that we started with this glass, we had over 30% increase of sales. So it's really nice. And we are overall tending to put the home, create solutions so the clients can use their spaces. Sometimes their home offices are on their kitchens or on their closets or on their vanities. So we have this system with wall systems that you can add a home theater hidden or open or whatever each client needs, they have. And just to finalize, so since we see this flow of clients going out of the city, we are seeing also a lot of people interested in opening showrooms because we work as a dealership program. So we have people looking for Connecticut, Boston, Washington, San Francisco, and we are looking for new dealers to open our showroom, which is cost around $200,000 to open a showroom. I think that's it. If you have any other questions, I'm here to help.
Very good. Thank you very much, Peter. We'll move to question and answers now, Freddie. We had a couple already. I think we saw some chats, but I think it'd be nice for you to elaborate for everybody on these issues. The first was for New York. You said it was a buyer's market in New York, and how about rent as well? The question is how long, and maybe elaborate a bit on the answer you put in the chat in the Q&A.
John, can you repeat, please? Because you broke up a little bit. It was hard to understand everything. And now you froze completely.
I froze again. Am I okay now?
Yes.
Okay. In the chat, you put a question, and you put a little answer. There was a chat question, but please, would you elaborate for everyone? You said it's a buyer's market, and I would also say a renter's market. How long do you think that's going to last? I mean, I may as well ask you to when we get a vaccine, but there we go. I'll leave it to you.
Thank you, John. No, I thought I had responded to everybody. I'm still learning how to do these Q&As on Zoom. Sorry about that. I feel that this is going to be a buyer's market until the tourism fully reopens and most industries come back. As Peter mentioned, many industries won't necessarily return 100% of their workforce to the offices because they just don't have a need for it. But other industries like entertainment, hospitality, they need to be physically here. So I think once tourism fully comes back, we had 65 million tourists in the city last year. And once a vaccine is available for everyone, I think the market will come back. It won't shift, I think, dramatically from a buyer to a seller's market, because I think some of the changes that we've seen during the last few months, they're permanent. But I think definitely people that have always looked at New York City as a safe place to diversify and invest in a strong currency like the dollar, and they like real estate, they're going to look at New York very seriously now, especially given the discounts that we've had. We've had lower prices recently, but if you look at the aggregate discounts from 2016, when prices began to stabilize and some places began to drop, we've had drops anywhere from 15 to 30%, and that's considerable. So I think we still have a couple of more years to go as a buyer's market.
And maybe you could also elaborate on the surrounding areas, what you've seen, because we've had our own discussion about this.
Yeah, I mean, I don't personally sell it in those surrounding areas, but we have partners and broker colleagues, and they have never worked this much in their lives. They are extremely overwhelmed. And in the beginning, when the New York City public schools announced that they were going to close for the rest of the semester, that's when they noticed a huge bump in activity and demand. I saw that, I was speaking with colleagues that have children in the city, in the beginning of the pandemic, when they saw the writing on the wall, they began to look in earnest for rental properties outside the city. So your Airbnbs or your HomeAways or VRBOs and things like that, just so that they can get away from the city since it was a lot of deaths and it was pretty scary here. And when you're stuck at home with children in a small apartment, it's just makes it much worse. And so you saw that first wave. When the cities announced that they were closing, then a second wave began even more. And then you began to see people not just renting, but now buying. And a lot of properties that were sitting on the market in these suburbs for sometimes months or years, they sold within a week, and they had multiple offers by New Yorkers, and some of them sold above the asking price. Some sold considerably above the asking price. So we had markets like Greenwich, Connecticut. My colleagues told me there, since the tax reform, the Trump tax reform, began to take people away from the states that have state tax, like New York, New Jersey, Connecticut, and they began to move to places like Florida and Texas to avoid the state tax. The market was dead pretty much. Then ever since the pandemic came and the quarantine, and the market has been on fire ever since. So I think this is a little bit of a impulse purchase, a little bit of a frenzy. So I think as a buyer, I would be cautious about overpaying for a property that you might just be stuck with for many decades to come. So that's what I feel about the market. Once, like I said, a vaccine comes, this thing is going to stabilize, especially when you read reports about the younger generations. They don't enjoy being on Zoom and staying on Zoom all day long. And when their shift is over, they're stuck in a small town and they're single and they want to hang out and they want to network. They want to go to a happy hour. So the younger generation is eager to come back to the city. They miss the cities, the bigger cities in general. So, yeah, I think that sums it up, I think.
Matheus, I'm going to follow up with you as well. You had this question in the chat about the rental market in São Paulo. Maybe elaborate on that and a bit more. But it's a very good answer, but maybe share it verbally and maybe add something to your questions for the São Paulo area. And also, again, I'll ask the same thing I asked Freddie. How about the surrounding areas? I know the data isn't quite as good, but surrounding city, other states in Brazil and cities in Brazil.
Of course, John. Well, in the rental market, what we saw in the beginning of the pandemic was a high volume of contract renegotiation, of course, especially in the commercial segments, because everything were closed, of course. So the landlords, they flexible prices, some grace period, for example. But in the residential segment, we did not have any major changes in São Paulo. In fact, in some regions, the rental prices went up a little bit. And it's important to mention that as the Selic rate is dropping a lot, as we saw in my presentation, the fixed income returns become less attractive. And historically, in moments like this, the real assets, such as real estate, they are always they benefit from it. So today, a rental income in São Paulo can vary from 0.4 to 0.7, 0.8 per month, depending on the location and type of unit, which is an excellent return with this new level of interest rates that we have here in Brazil. So that's why we are seeing that the rental market is also very strong at this moment. Well, in terms of other regions, John, it's important to mention that we don't have the data so rich that we have in São Paulo. So what I can say is based on our internal numbers and our executives across the country and our franchisees. What we saw is that in other cities, the recovery is always slower than what happened in São Paulo. São Paulo is always the first market to drop and also the first market to recover. So there's a huge difference between the number of new developments and primary market in São Paulo compared with the rest of Brazil. For you to have a notion, approximately 40 to 45% of real estate in Brazil is concentrated in São Paulo city. So, I mean, it's almost half of the real estate market in Brazil. So when we see the developers, there are lots of them which are public listed companies, and there were a lot of them who became public listed company in the second semester of 2019. Most of them are focused in São Paulo. We have some big developers in other cities, but São Paulo is always the main market. What we're seeing is that markets like the São Paulo state countryside, we have lots of cities that are rich, that have great population. So the regions of Campinas and Sorocaba, Piracicaba, there are cities that are very important in Dayatuba, in São Paulo state. So they are all they are seeing a movement similar to what we see in São Paulo city, the capital. So they are recovering fast. There were a movement, as Fred mentioned, in New York and the surrounded areas. We had in the pandemic lots of people that moved from São Paulo to cities 100 kilometers from distance to have bigger houses. But we need to separate what is something that is emergency and circumstantial, and what's a decision for a long term. So what we saw in the first moment was families moving to São Paulo, to the countryside, for 3 months, 4 months, 5 months to go through this lockdown, this pandemic, the quarantine in a bigger place. But and in terms of other capitals, we are seeing a recovery in the primary market in Rio de Janeiro. We had lots of launches in the last months, and they had good sales speed. Fortaleza in the northeast is also a city that we are having good numbers, even with the pandemic. Londrina, which is a city in the countryside of the state of Paraná, is also with very good numbers here in Lopes. So I mean, it's kind of it varies a lot depending on the city, but again, I repeat, São Paulo is something totally different from the rest of the country, and things are getting more hot again in São Paulo first, and then we probably will see this in the rest of the country in the further months.
Very good. You described the reverse of the trend of the last 100 years, right? Which has been from rural to urban migration. Perhaps this turns out to be temporary or partially temporary, but it sounds like, at least in São Paulo, your experience is it's temporary. I have personal experience from Minas Gerais that it's the same phenomenon. People are moving out of the really dense parts of Belo Horizonte. We'll see how permanent it is. And certainly, these types of movements may or may not become permanent. I think it's best, let's talk to Peter before we go back to you, Fernando. The innovations you're talking about clearly aid in the permanence or how persistent this movement is. I mean, where have you seen, just in general from what you're looking at, not just on your designs, where you've seen some true improvements of productivity as opposed to, I mean, we know a lot of where productivity is suffering, right? Schools, even at the chamber, we've got remote but it's still not the same. So it's just maybe outline some of the where you've seen. So I think there's a limit to how much people will stay remote, but that's my own opinion. So let me leave it to you. You know better than I do.
All right, do you want me to answer first?
Go ahead, Peter.
Oh, sorry.
Oh, I have a question. to Matheus and I think Fred, which what are your thoughts about the rental buildings? Because Fred, correct me if I'm wrong, in New York, I think 70% of the buildings are rental, correct? And Matheus, how do you see this trend in São Paulo with the tax, with the lower tax, the return? So how do you see this? From my point of view, we see a couple of buildings coming up, but do you see like the trend as the same as New York? How do you see this?
Matheus, why don't you go first?
Okay. Well, Peter, I mean, there's a huge difference in the São Paulo and New York markets when we talk about rental buildings. I mean, it's not common here yet for the developers to build a residential or a residential building to rent all the units as you have in the US. However, it's true that we're starting to see those movements. We have a couple of companies here in Brazil, in São Paulo, that based on what they saw in the US or in some cities of Europe, they see the potential to do this kind of things in São Paulo, and they already started to develop. A couple of weeks ago, I had the opportunity to visit one of these buildings. It's from a company here that has some shareholders from the US, and they launched they delivered the first residential building 100% for rental. It's in the neighborhood of Pinheiros, which is a very good neighborhood here. It's very near the subway. It's a very good place. A small apartment from studios, 1 and 2 bedrooms, but limited to 45 or 50 square meters. So small apartments, and they are renting for a price that it's of course a little higher than the average of the market. However, they have all the services, it's all the furnitures. So it's amazing. It's a great project, and they have aggressive plans for other buildings like this in São Paulo, and they are not the only ones that are studying this kind of thing. So I think, yes, Peter, we're going to see in the next years more people, more investors doing those kind of things that we see in New York for a long time. And if I'm wrong, Fred, and passing the ball to you, which is the majority of the market of Manhattan is rental. In São Paulo, is not like this.
That's right, Matheus. The majority of New Yorkers, they do rent, and the rental building is a big part of this inventory. And as we study the trends of newer generations and younger generations, they prefer to rent than own. It's a shift from ownership to experiences. We talk about that all over the world, and it's about the shared lifestyle. And so I think this trend is only going to increase. One thing that we're not really feeling yet is the number of foreclosures that are going to hit the market, because there are so many incentives and frozen forbearances in place by the government to basically keep the status quo. At some point, these programs are going to expire, and then we're going to start to see the foreclosures happening. And then it's going to reflect the actual market with the large unemployment that we see. Right now, we're sort of in this suspended in this limbo moment, but that's not going to last. So I think people will continue to rent more than own, especially when they make the math, the calculation, and it becomes, Manhattan prices have always been super high, which is the reason why people have decided to rent over purchase. Even if prices do drop a little more, which I think they will, it's still far from most people to reach a down payment, so they will continue to rent, which I think this is just a trend for the future. It's going to be more and more of that. So,
sorry, John, if you I just want to answer to complement my answer with two things. I think Peter, for me, there's no doubt there's space for this kind of business in São Paulo. I mean, it's a city with millions of people, with a lot of money involved, and also these trends that Fred mentioned from new generation. So I think that the thesis is very good. However, what I'm seeing is that once this kind of developments are relatively new here in Brazil, they are on the phase that learning how to do the math and the feasibility of this project, how to be efficient in terms of administrating 200, 300 units. It's not simple. The profit margin is on the efficiency of earning money from each of the units. So you need to have this staff working with a lot of efficiency. So I think that they are testing the models with 1 or 2 buildings, and once they learn how to do this administration efficiently, we will probably see increase in the number of developments with this characteristic. And different from what Fred mentioned from the New York market, as I mentioned in my first presentation, with the interest rate dropping a lot, it's becoming more attractive for people to buy homes in Brazil, in São Paulo, than it was like 4, 5, or 10 years ago. So this kind of, probably this will want to create kind of a battle between the willingness to rent, and also the opportunity to buy a home. So I don't know how it's gonna move, how this movement will be in the next couple of years, but it's something to also reflect about.
Well, I want to go back to Fernando because we've had a couple chats over the last 2 weeks, Fernando and I, and this is part of the realm that I've worked in for quite a long time. But we've seen a very interesting dynamic in Brazil. You're talking about foreclosures. Well, in the 2008 crisis, when the dollar went berserk because of what happened in the United States, a lot of companies were in very bad shape. I won't name them. Some of them don't exist anymore. That is not the case now. We see Brazilian government, again, is still a net creditor big time in dollars, but we've seen, if we look at the hedge market, companies are fully hedged, and we've seen when the dollar's been weak, Brazilian companies diversifying abroad. And what we've seen also with the lower interest rates is companies are refinancing their debt locally. So we had a big outflow of capital starting in the end of last year, before the pandemic, and going into this year, where Brazilian companies were paying down their debt. That's why debt keeps going down at the same rate that the central bank is using for an exchange. And I find this very encouraging. And my question to Fernando is, are you seeing the same thing in the real estate market? Are you seeing Brazilians bringing assets back to Brazil from abroad and using the foreign exchange market that way?
Fernando, get out of mute.
Yeah, I guess your analysis is like quite perfect regarding the hedge and the companies and those that kind of transaction. And regarding real estate, and specific to your question, yeah, we saw a lot of movement of Brazilians that are selling real estate, bought in US and Europe a few years ago. That happened a lot. So regarding our numbers at the office, I may tell you that like 90% of our transactions used to be of Brazilians sending money to overseas or to abroad, and 10% of money coming in. Okay, and since like February and March, is like when the US dollar got too high and the pandemic started, that changed a lot. So regarding in our office experience, that changed a lot, and now we have 50% of Brazilians sending money overseas and 50% of money coming in, because most of our customers bought real estate in America like between 2012 and 2015, with the US dollar average of 2.5 or almost 3. And the real estate market, that they had a valuation on their assets, on their real estate in US dollars. The square foot in US dollars get higher, and the US dollar rate get very, very higher. So you can't resist. You know, if you bought, Fred can help me, if you bought like a Trump Tower in Sunny Isles in Florida for $700,000 in 2012 with the dollar at $2, and now you had like the same condo priced at like $1.5 million US dollars, and the dollar higher than 5. It's like you just sell it, you know, and bring the money. The thing is, those customers, I guess this movement is getting a little limited because customers, okay, they're going to sell their real estate overseas and bring money to Brazil. And what are they going to do with that money? You know, that's the big thing. So I've spoken with a lot of customers, and they say to me, Fernando, okay, I want to sell my dollars in this price, 5.5, 5.40. Okay, you're going to give me reais in Brazil, but what am I going to do with this money? I'm not going to put in the stock market because I think it's too risky. I'm not going to release it at the bank. No, the real interest rate is negative when we get the inflation and the Selic rate. And the big question is what to do with that money. And I guess regarding that question, the investment in real estate in Brazil can be a very good option. You know? So I guess these customers may realize that what they have to do here with the money is investing in real estate, because no one now wants to like create companies or put money in business here because things are a little weird yet. So they don't want to move to stocks, you know, because it's not the profile of those customers. And I guess real estate will be the answer. You know? So I guess your question is very important. This is happening a lot, but we have that point also. Okay, I'm going to sell US dollars in over than 5 reais. I send that to America, pay 2.5, so it's 5 now. I win money with my condo in Florida or in New York. Okay, so but I have here reais in Brazil. What am I going to do with that? So that's a big question we've heard a lot, and I guess this is limited a little. And I'm talking about Brazilians, okay? I have also foreigners. I just talked this week with a customer. He's a big businessman in Europe, I guess in Netherlands, and he was thinking about sending like 10 million euros to Brazil, but he's afraid. You know, he said, "Oh, I'm not safe enough to put money to do that transaction now. I'm not sure what things are going to happen." So I guess when we get out of this pandemic, things will flow a little bit more, you know, because when you do the math, it's okay, it's a good thing to do. But when you look to the overall aspect and see all those pandemic thing, and we're not sure about how future will move forward, and this is limiting a little those kind of customers that are thinking about doing that kind of movement.
Well, thank you. Yeah, I think the international press has missed the boat out in many aspects of Brazil and analyzing them, and certainly the strength in the dollar is one of them. You hear, doomsday stories about Brazil, but really what's happening is Brazilian companies are paying off debt, and that pushed the dollar up. So a good portion of that is that. And that's very good for Brazilian credit, I would say. So and what you just did is confirm something similar in the real estate market. So thank you very much for that.
And I want to echo what Fernando mentioned. Thank you for that, Fernando, because it's great to see not only Brazilians, but foreigners moving money into Brazil for the first time in a big volume to invest there. And I think there's also a little bit of uncertainty here until the elections happen. Yeah. And that's why I feel that the inventory that I showed on the screen, the rental inventory is significantly higher because a lot of these homeowners temporarily left the city for the suburbs and they realize it's not a good time to sell. So they put their properties up for rent just for a year or two until they can enjoy some time away. And then only the people that are really in that desperate need to sell are putting their properties for sale right now because for their personal cash flow reasons, they need to have this liquidity in order to buy something in the suburbs if they have completely made the decision that it's time to move. And to answer Fernando's question regarding these Brazilians that have purchased, 2012, 13, 14, the market prices have since gone down. The property values have dropped in price, but like you said, if they sent their money when the dollar to how was 2 and now it's 5, even if their property doesn't sell for what they paid for and they take a loss on the real estate side, they will maybe even out that loss in the exchange rate. And so they're willing actually to take a 20-30% loss. This is happening more in Miami than in New York. Because of the profile of Brazilian buyer for Florida tends to be one that is less liquid. And so when things fluctuate like this, they need the money. So they are willing to sell it at those losses, but they will make up for it in the exchange rate. So.
Yeah.
Wonderful. Well, we've gone a little bit over time, or we're getting to the end of our allotted time. Does anyone have anything final to say before we close up?
When can we all get together and have a happy hour?
That was your earlier question. You can still do it by Zoom. We'll ask you to play again with your mother. Really excellent. So anyway, okay. Thank you very much for such a great discussion. I think we'll have a new one in a couple months to see how this thing plays out a little bit. And thank you all for coming. Our next webinar will take place next Tuesday, the 8th of September at 10 a.m. when we will have a discussion on the importance of Brazilian independence with Jorge Paulo Lehmann, Professor of Brazilian History at the University of Illinois, Jerry Davila. Until then, stay healthy and in good spirits.